But let's talk about Berger Paints. For Q4, their EBITDA was impacted, margins have contracted, while the value sales are impacted by about 5%. Their Q4 volume growth came in at nearly 14%. Let's connect with Abhijit Roy, the MD and CEO of Berger Paints, to discuss their Q4 performance. Abhijit, hi, good morning, and always good speaking to you. You know, this discussion we were having about the recovery in rural consumption, right? Or Tier 2 and Tier 3 consumption. How much merit is there in that argument? Are you also seeing green shoots? If yes, can you quantify it for us? And this 14% volume growth that you saw for the quarter, is this something that is sustainable in the first half of FY25?
Yeah, so morning, Sonia, and there has been an improvement in the demand in the rural areas, in entire 3, 4 and upcountry towns. As we see it today, this demand is likely to continue. So in the first half, I think we should see sustainable volume growth happening. As we have seen in the fourth quarter and even for the whole year, we are a double-digit volume growth. And that is likely to continue, going forward as well.
So when you say double-digit volume growth, right, is it fair to assume that you'll hold on to this 12-13%, or do you think, given the kind of competition that this space is also seeing, by the end of FY25, is 10-11% something that is a more reasonable ask from your end?
It's so difficult to say at this stage, Sonia, because as of now, the competition hasn't been, biting us so far, but obviously it will have some impact. Our estimate is that we will still be reasonably sure that, we will still have a double-digit volume growth at the end of the year as well. We have been gaining market share even under, this last year as well, we gained market share overall. And our objective is for the last 2 years, we have gained about 0.7, 0.8%. And that's something which we will continue to do, hopefully, next year, this year as well.
Sir, while your volume growth may be double-digit, the value growth has been a lot less. One, because of the price cuts that you took, but also the mix is changing. There was destocking seen in the luxury segment. There is higher growth seen in the low-valued, paint segment. So what's happening on that front? And what's the outlook?
You are right, so mix is changing slightly. Of course, the destocking which happened in the luxury products is going to stop. Because there was an anticipation in the market, and dealers typically when there is an anticipation for a price increase, they tend to stock up. When they feel that there might be a decrease, they tend to stock down. So that destocking happened in the quarter 4 for luxury products, because that's the only category where prices hadn't dropped. All other categories prices had dropped. So the dealers expected the prices to drop in luxury as well, and they were holding on to their purchases to some extent. That's going to come back in quarter 1 and quarter 2. So you will not see that destocking happening this quarter. The second part is, the low value and high volume products like admixture, tile adhesives, putty to some extent maybe. Those are growing at a faster pace. That will continue to happen because it's coming on a lower base. So the growth rates are much higher. But that is not a worry because, those are also reasonably profitable. So it doesn't matter so much. The volume growth, therefore, will be on the higher side. This price decrease impact will continue for some more time. So therefore, the volume value gap will be there to some extent.
Mr. Roy, hi, good morning. Good to have you with us here, sir. Prashant this side. Could you tell us for FY25 then, sort of putting all of this together, what is revenue growth going to look like?
So it will be marginally below the double digit, possibly very close to the double digit volume growth number. But below that slightly because of the price deflation which has happened, and right up to December we will have that impact unless there is a price increase happening in between. Logically speaking, there will be a 2 to 3% differential between the volume and the value growth at the end of the year. That's where it will be. And profit growth will still be reasonably good. As we have seen, this year, of course, was very strong at about 24% plus growth. But here it will be similar to the volume growth, possibly. That picture will be more clearer once we move forward a little bit.
So, 9% kind of top line growth is what you're kind of guiding for?
Sort of 8 to 9%, you can say, for the year.
8 to 9% revenue growth. What about margins, Mr. Roy? Let me just sort of tie that in as well. will that be around FY24 levels, 15.5%, or will it be
Similar
slightly?
levels. We have always said that it will hover between the 15 to the 17% range, and that's where we will remain for sure.
So around, but it should be at the lower end, right? I mean, around 15%.
No, not necessarily. It can be, more towards, the middle of the, equation, 15 to 17. So 16% is more or less, where we will be possibly.
Okay, I want to talk a little more about any changes on the ground yet with Birla Opus coming on board. I know you said that competition has not, affected you yet. But do you fear that there may be price cuts across the system just to stay in the game a little more? Or do you think that the pie will grow enough for everyone to have, a fairly decent organic growth? Just trying to understand the dynamics now.
So as of now, it doesn't look like that, there will be intensification of price cuts happening, to sustain volumes. That's unlikely given the current situation, what we have seen so far. It seems that the market has, taken this in its stride, and, our sales have been relatively unaffected, I would say, even in the locations where, they have launched already in a decent way. So therefore, I don't see this impacting us in a significant way at all.
Okay, you were telling my colleague that you saw about a 0.8, 0.9% gain in market share, right? So fair to assume that market share is somewhere around the 20-21% level right now for you?
So in over the 2 years, we gained last year about 0.4%, this year again about 0.4%. So we are around the 19.7, 19.8% level. And hopefully we will cross the 20%, mark, this year.
So anything else that you're doing in order to stay in the game, to combat competition, to make sure your market share is at these levels? Any strategy that you have for the next couple of years?
Yeah, so three things are there. One, we are relatively have a weaker presence in certain markets, especially in the urban centers, in the west and the south. So we are, putting up a separate effort on that direction, growing our market share, our distribution reach first, and then, trying to develop our sales in those locations. So that's the first thing which is going to happen, and, where we have some interesting strategies around that, which will help us. The second is, of course, spending on branding and, strengthening our brands further. We increased our brand spends last year substantially. This year too, we are going to increase further on that. Last year, the increase was to the tune of almost 40% in terms of spend increase, both digital and, television. And this year also there will be a growth on that, and we expect that, that will strengthen our brands. It's very important in the time of competition also to do that, and that should help us, going forward.
So what was your overall branding and marketing spend as a percentage of sales in FY24, and how much will it go up in FY25?
So that, as I said, it increased by, about 40 odd percentage from last year in terms of growth. I can't exactly remember what the percentage to sales was. And I expect that, this growth will not be at that level. It will probably be more around 15% odd level this year as well.
Okay, and in terms of retail distribution touch points, do you have a number in mind?
Yes, we are going to add about 8,000 color bank printing machines. Last year we added about 7,100. This year we are going to add another 8,000. That's a substantial number, to be added, to our current numbers, which is about 40 odd thousand.
Okay, I want to understand also from the waterproofing and tile adhesives segment, what kind of opportunity do you see? I mean, how much do you think your business can grow in this space? What could the percentage contribution be, and what's the overall opportunity?
Massive opportunity there, Sonia. In fact, this is the fastest growing segment in our portfolio as well. It's growing well. It's in double digit of contribution almost, today. And we see this, segment growing at a very, very rapid pace going forward.
Okay, so what is your aim? I mean, how much would it, I'm sure it's very, very small right now, but how much do you think it can contribute to your overall business, say, over the next 3 to 5 years?
No, it isn't small. So it's already crossed 1,000 crores, so it's not small at all. And I see this growing at quite a rapid pace, so this will be one of the big growth drivers for us going forward.
Thank you, Mr. Roy, for joining in, and wish you all the very best.